This is how I took £500 to 30,000 in the crypto market. I entered here at 8 cents and exited just under $5, giving me a return of 6,000%. Now, to catch trades like this time and time again, I use a 6-step system, and it's your lucky day because I'm giving it away in this video. Step 1, identify the market. Back in January of 2021, I noticed AR and VR technology was on the rise, and the world was moving more digital beyond our fingertips. It became clear to me that the metaverse was going to be huge and would eventually become a new standard for us all. This is when I decided that this is the market I was going to invest in. Now, looking back, I guess I was right. The metaverse is everywhere. Facebook has transformed into Meta, Apple has released their new AR VR glasses, and the multiverse concepts are in TV shows and movies. The metaverse is going to take over. Now I had the market I wanted to invest in. I just had to determine how much money was in this space. We have our current metaverse, which is called Web 2.0. Now, this includes platforms like Roblox and Minecraft, and our new and improved version built on crypto tech called Web 3.0 metaverse. What I found was crazy. The Web 3.0 metaverse was only worth 30 billion, but the current Web 2.0 metaverse was worth 14.8 trillion US dollars. This is when I knew this was going to be huge and I had to get in. Now, in step 3, this is where we calculate the market ratio. Now, from the numbers we have 99.8% of that market share in the Web 2.0 metaverse, with only 0.2% in the Web 3.0 metaverse. Eventually, some of that capital is going to flood into the Web 3.0 metaverse. It was just a matter of determining how much and when. This brings us to step 4. Now, I thought to myself, the shift of this wealth is dependent on companies adopting crypto and NFT technology, but most importantly, AR and VR tech. Only once every single person around the world has AR and VR glasses the same way we have mobile phones, only then will we see a huge amount of that wealth transfer from Web 2.0 to Web 3.0. So I did a bit of data modeling and came to a conclusion that we should see $1 trillion US flow into the Web 3 metaverse by the year 2025. And that will give us an increased market ratio of the entire market from 0.2% to 7%, which I believe is very reasonable. Facebook has rebranded to Meta, focusing more on the metaverse. Apple has released their Apple Vision Pro, and Elon has changed Twitter to X, which I'm pretty sure, I'm willing to bet on it, is going to have metaverse capabilities. I mean, at the end of the day, we have to follow the big money, and it seems to be that they're going this way. Now, to get involved in this $1 trillion opportunity, I knew I had to invest in a coin that had an existing metaverse built on top of crypto. And I did my research and I found the coin Mana Decentraland. When I jumped on it, it felt like Minecraft, so I knew it would blow up because of its familiarity. Now, its popularity would then bring about liquidity for the coin Mana when individuals start buying NFTs and land in the ecosystem. Now, because it was one of the first coins within this market, I knew it would have a first mover's advantage, just like Bitcoin and Ethereum in their respective market share. So now I knew I was investing in the Web3 metaverse, which will hit $1 trillion US by the year 2025, and in a coin called Mana. I just had to determine how much of that 1 trillion would flow into that coin. I determined a target of 10%, equating to $100 billion US. That will give me a price target of $53.33. So I entered in January of 2021 with one of my entries at 8 cents with 6,366 coins. Now, once that hits my price maturity at $53.33, that would give me around 339,000 US dollars. So am I just sitting here waiting for my investment to take profit? No, because the crypto market goes through bull and bear cycles. So it didn't make sense for me to hodl my investment like everyone else, but to use the dump that would eventually come to my advantage, selling at highly probable regions where the market can dump from. And when it does, I can use that capital and buy back way more coins. So when my price target of $53 does mature, I'll be making way more. Alternatively, I could just reinvest and get my existing coins and profit the difference. Either way, I call this technique HODL, getting out for their life. And I did just that. On 30th October of 2021, Facebook had changed their name to Meta. Now, this announcement made Mana explode. And with my technicals of HODL aligning up, I knew it was time to get out. And I did, giving me a return of 30,000 US dollars. Now, I also let everyone on my Instagram know too. And what's crazy about this, between the two posts that I made, my investment went from 4,000% return to 6,000% return. And that was just a matter of 15 minutes. This just emphasizes how important it is to get in early, especially in a bear run, because this is where majority of your wealth will be created. Looking at the charts now from where I sold, it has dropped over 90%. So that means my 30,000, had I not sold, will be worth 3,000 right now. The power of this technique means that I can buy back at 30 cents 100,000 coins. Now at $53, that will be worth 5.3 million US dollars. Alternatively, I could just buy back the existing coins that I had. That will cost me around 2,400 and profit the remaining 27,600. Let's compare the two. A hodler is guaranteed to lose up to 90% of their profits when the market dumps, whereas a godler can use that dump to their advantage and double, triple, or even quadruple the number of coins that they have. As for time, the hodler will have the capital locked in for years, and the godler will be enjoying their profits whilst watching the market dump. I hope you found this video insightful. If you want to learn more about this style of investing, then subscribe to this channel and follow me on Instagram at Huzaifa.Ghaili.